Howdy, folks. I'm going to do a quick update. Please forgive all the noise and sort of chaos behind me. I'm just doing this in the living room because the house is being cleaned, and wanted to do an update, but I'm not in my office. But let's go through a few things very quickly, and I'll try and spend just a few minutes to give you a broad idea of what's going on. Now, today we've got the European Central Bank coming out with an interest rate announcement. No one really knows what's going to happen. We saw CPI just ticking up a bit yesterday. Core CPI as expected. So it's sort of mixed reaction to what's going on with CPI in the US, but the European Central Bank's decision today will be important. And then also we've had interesting things like Apple, the new iPhone came out, a bit of a damp squib. Had a look at the sort of details of the new kit. Not great, not bad, interesting. The washing machine sounds like an aircraft taking off behind me. So Apple slumped a bit. We'll have a look at some of the stocks and where the stock markets are looking. Everything really just sort of at key levels and not moving a lot. But one good thing is natural gas. We've seen a good hold at that support. This is the 4-hour chart on natural gas. I drew this little circle here saying we've got a confluence of moving averages there, and chartists will like the look of that, and they obviously did, because we bounced beautifully off there back to the top of this gap range and trying to get up again. So we're still long quite a good decent chunk of natural gas. I reloaded at $2.70, a little bit more. We took some good profit at the tops, and now looking for another move up. So let's see how that goes. Overall on natural gas, we're really still looking to get to the top of this daily channel. But we've got the fall coming up, and it's a bit of a doldrum period for gas and energy in general. Energy prices are going up. We've got pressure on oil prices, which may also actually influence natural gas. Saudis and OPEC, etc., trying to keep the oil price higher with a potential slump in demand. And we could see a similar sort of effect in natural gas. Here's the daily chart. There's the top of the range. Channel at about 315. That's where we're aiming for. So far we're long with a decent piece and looking for this to carry on moving up, and it's looking okay. I wouldn't say great guns on that. WTI, please have a look at Twitter. or X, I just put a new tweet up on that, and I'll put a link to that. Actually, let's have a look at that quickly, and just some comments on WTI, and I've put some few things up on Twitter this morning that are worth looking at. This is what I've said. WTI chart indicates that we could top out around about $90, just below, whereas the Brent crude chart points to 105 plus. And we start with the Brent crude chart. This is the weekly chart. It's a good weekly channel here, and the top's right up here are between 105 and 110. So that's what the Brent crude chart looks like. Plenty of space to the upside, and we know that the Saudis and OPEC, etc., are trying to keep the price up, and Russia with production output cuts. But looking at the WTI chart, WTI is the price from the West Texas intermediary price. Brent crude is the London price, really, and a slight difference in pricing. I did notice that the price out of OPEC, out of Saudi, etc., is at a very, it's over $100. And about 10% of the oil that's used in the US comes from there, and that's already over $100. Could that be a foreboding of prices to come? Probably, I don't know. This is where WTI is. There's a resistance band above us here at around about $90. We're just probing into that now. Got a bit of a channel formed by these lows and sort of these highs. We've poked through the top of that channel, and actually it looks to me like this is accelerating. It doesn't look particularly good to the downside. And I think if we look at the Brent crude price, and we look at what OPEC's doing, and we look at the price out of Saudi, over $100 already, I think all the risks to the upside on oil. So that's all I want to say on that. And then sugar, we're short on sugar. It's just faffing around. A bit of a topping process going on here with a nice wick high. I'm not going to zoom into all these charts. Wheat, we're actually long on wheat, despite everything I said on wheat, simply because of this bounce we had after forming a new low, a spike down through the support from June this year. Beautiful spike, wick low, bounce back up again, false break, and then we followed that through with a rally the following day. And I think that looks quite good. Wheat really should be stronger. It hasn't been. It's been a very conflicting situation between the price of wheat and the risk to the upside on wheat. And so far, the charts have won. The price has come down. I don't know why. Perhaps that's the bottom that we've put in place. We've taken a small long position on that. So that's all of that. I did tweet, if you had a look at the tweet on metals. Silver, I think we could get down to 21.50. And just coming down hard on that trend line. The rapidity at which we've approached this trend line is quite something. And I think we're going to have to get into this yellow zone again. The bottom of this yellow zone, it's a major weekly support. It's around about $21.50. There we go. Very, very key level. I've always been interested in buying silver around $21.50, maybe even 21. I think if we do break this trend line, as I said in my tweet, we'll shake out some of the weaker hands, the paper hands, if you want to use modern lingo, paper hands, diamond hands, etc., etc. Get to the bottom of this yellow zone, which is at 21.50, and maybe even down to 21, which is a 61.8% retracement. That's this blue zone here. Could get as low as that on silver, but somewhere between 21 and 21.50, a good place to buy. We're still long on gold. I'm looking for a clear reversal. This is a 4-hour chart on gold. Looking for a reversal to get some more. I'm only sort of half loaded up on gold and just waiting to see what happens. Not looking strong, but not looking particularly weak either, considering we've seen quite a lot of strength in the dollar. Gold hasn't come down very much, so that's encouraging overall. Gold has been quite firm, not strong, not bullish, but just solid, really. Palladium, for those of you who trade palladium, I don't. And we'll look at uranium as well. Palladium, I drew this line in a while back, and it's followed it perfectly. All these wick lows on palladium looked like it was going to bounce after breaking down, making a false low, false break like we saw on the wheat chart. And I generally don't like palladium, but I think we could get a bounce up to about $1,350, $1,350, and then back down again. And we're halfway there now. So for those of you who bought after my signal that I sent out on, not a signal, just a thought, really. I don't send out signals. For those of you interested in joining my private trading group, it's not a signal service. I hope and I like to think it's a bit more sophisticated than that. And we try to trade the markets and discuss commodities and stocks and metals and Forex and all those sorts of things from a serious perspective and not just some sort of random signal service. So the link's below for that. And also, while you're here, please consider subscribing to this YouTube channel and give the video a thumbs up so that others can find out about it. There's also a join button on this YouTube channel, and you can join this YouTube channel as a member. It's $7 a month, and you get access, and you are privy to all the extra stuff I post up for private members. And that's all I've got to say, really, across. Oh, Euro, I said we'd look at uranium. Well, we missed out on the second part of this rally on uranium. We were long up until about these highs here, and we've just missed out on this last surge. We've got a bit of a channel in place, and we've got a red resistance line there, or pink resistance line, if I show you on the weekly chart. And I think we could get a pullback from this pink zone back to the bottom of the channel, anywhere down to about 24 and maybe even $21 to $22 be a great place to buy this ETF. URA tracks uranium in various forms, but I think quite a strong surge up. This pink zone is a good resistance level. It's also the top of the channel. For those of you who feel like shorting uranium, somewhere around about 26 to 26.30, 26.20 be a good idea. I'm long only on this one, so I'm looking for a pullback. But if you are thinking of shorting, 26 to 26.20 on uranium, not a bad idea. And then stocks. Well, this will take a whole video to discuss stocks, but generally now I've actually just gone long with my private group on NASDAQ and NVIDIA after yesterday's price action. And I think NVIDIA, so I'm overall short on NVIDIA from $510, but I've now hedged with some long size. And I think we could get a bit of a bounce off the bottom of this channel and this gap. We didn't get into the gap. There's a gap just below us, this pink zone here, and we bounced off the top of the gap. Remember, there's always a lot of supply and demand at the top and at the bottom of every gap. So gaps not only act as price magnets, in other words, they like to be filled and closed, but also they can act as support and resistance, the top or the bottom of the gap. And in this case, the top of the gap perfectly acted as support. We bounced off there. So we may have to get back into this gap first or even higher before moving down to attempt that gap. Overall, on NVIDIA, I'm aiming for the huge earnings gap down to around about $340. That's the previous all-time high. But it starts at 380, 370. and all the way down to the bottom of the gap at about $310. That's where I think ultimately it's going. But we could get some faffing around and fiddling around for quite a long time. And right now, for the very short-term swing, I'm bullish on that. Also bullish on NASDAQ. There are a few other things interesting on here. I'll have to do a whole video on stocks. It doesn't seem to be something that most people are trading, individual stock names. Most people seem to trade indices. So that's my thought, that we could get some strength into SPX and NASDAQ now, a little bit of a rally, and maybe even to new highs for this year. But a couple of interesting things. Tesla. Well, let's start with Tesla. Tesla, I think we could get up into this sort of pink zone here. It's looking quite bullish. We created a gap up. We're holding, consolidating there beautifully. Maybe we've left a gap behind. We've got to get to it, and we've left an island reversal, not an island reversal, an abandoned baby reversal all the way down here. So that's going to have to be dealt with at some stage. And this gap the other day, that's going to have to be dealt with. But for now, we've got a gap above us that's also got to be dealt with. I think it's heading to the gap above us before we're going to fill these lower gaps. So let's look for Tesla to move up to $290, maybe $300 into this pink zone here, way above us. And at some stage, we'll be testing up into those levels. Now, that's the 61.8% retracement level. And then we've got the 78.6, which is even higher at about $350. Don't be surprised if Tesla reaches up there. When Tesla moves, it can move really fast, really dramatically. And the other interesting chart is Apple now. There's some problems with Apple. The new iPhone and I think the AirPods, which I'm wearing now, I think they're called AirPods or iPods, whatever, a bit underwhelming, really. New iPhone's made out of titanium. It's got a better chip. It's got a few extra features. Got a better camera and a better price for the Pro. So they seem to be switching from volume to volume, number of items sold, or volume of items sold, which doesn't seem to be increasing that much, to just increasing the amount spent per Apple product by locking people in and making things like the Pro versions of iPhones more expensive and expecting that people will be willing to pay more even if they don't buy more units. But Apple hasn't responded well to all of that. The iPhone, as I said, I think it was a bit underwhelming. But also we got problems in China with demand, and potential curbing of demand through various government bans and whatever. And just generally, it's a very expensive item. And if we are, and it seems to be that we are entering a recession, the most expensive phone on the market, I know there are a lot of Apple fans, and I'm one of them. All of my stuff's Apple, and I'll never use anything else. But I might delay buying a new MacBook Pro or buying the new iPhone 15 by a year or two because it costs a lot of money. So to replace your iPhone and your laptop and your AirPods and your watch, etc., it's going to cost you $5,000 or $6,000 or $7,000. And in times of difficult financial times, it's not going to be what everyone wants to do with their money. They'd rather do something else with it. So I think Apple's struggling a bit. We may see a bounce in Apple, and I think we're probably going to see some ranging on all of these markets as we find out what's going on with the Fed and inflation, which is now ticking up, which is a slight problem. And if we see another month of another uptick in inflation, there'll be jitters about more interest rate increases by the Fed, et cetera, and the whole thing is going to affect these markets. I think we're in for a tumultuous, ranged time. I think we're going to see big rallies and big dips on stock markets until the end of the year. And so we've got to be nimble and trade these things, particularly the stock names, individual names, on a name-by-name basis. And whether chip stocks can hold their own and carry on, whether the euphoria has died off a bit, whether Apple can continue to rely upon perhaps slightly flagging volumes, but higher price per unit type scenarios, whether Tesla's going to carry on roaring higher. I think Tesla probably will make some headway, but there are also some drawbacks to what's going on in the EV market. And again, these are not cheap cars, but there is demand for them, of course, because places like California, 30% of new cars, I think, around about that level, are electric now. So a very difficult market overall. Expect large swings in both directions and be nimble. That's all I can say. For now, we're long on NASDAQ, long on NVIDIA. NASDAQ long. The NVIDIA longs are hedged against my general overall short position. Just let me point that out. When it comes to the yen pairs, well, I've switched to day charts on all of these yen pairs. All I can say is these are all beautiful topping formations, but they're tediously long and drawn out. You can see they're all running out of steam. For example, on euro yen, that's a classic reversal pattern. Classic reversal pattern on dollar yen. Pound yen just sloping downwards, being forced down by this trend line. CAD yen a little strong. But actually, if you look at CAD yen in the bigger picture, we're just near the top of that channel. We're not at these recent highs yet. There's still some space to go. There's the channel line. And actually, this is a classic channel topping formation. It's taking some time, though. And you'll see the same across all of these. Incredibly frustrating. I'm short and hedged on basically all of these pairs. And I've been in and out of short hedges, long hedges, and generally making a bit of a mishmash of it all. But I think we'll be okay. We've seen this recent news. Please have a look at some of my other posts and videos about the decisions by the Bank of Japan and the Japanese Ministry of Finance to look at potentially increasing their interest rates for the first time in, I don't know how long it is, I think it's 15 years now. And then we've also seen the adjustment to the yield control curve de facto, not officially, but de facto. So all starting to move towards measures to increase the value of the yen to combat inflation, which is getting higher and higher in Japan. We saw the Tankan survey really low. We saw all sorts of sort of economic numbers coming out of Japan in housing, in the Tankan numbers, in industrial production, and their currency and bond yields, long 10-year bonds starting to go higher. And so I think we're going to see overall a strength in the Japanese yen coming in. That's not just my view, that's the view of places like JP Morgan and Bloomberg and Reuters and analysts all over the show who feel that the yen has probably reached its weakest point for quite some time, that we could see significant strength coming into the yen. And that's what I've been thinking, perhaps a little prematurely, but I think we're probably there now, and these are all going to come in, these charts, or in other words, the yen's going to strengthen and the other currencies are going to weaken. We also see it on COT report and the positioning of traders, particularly large speculative hedge funds, and also looking at the market makers and the hedgers, all starting to angle towards the idea that the yen is going to strengthen. And I think there's unrelenting pressure on the powers that be to make sure that the yen does not get any weaker than it is. I think that's absolutely crucial, and I think we're going to see that. But you can see all of these charts here taking ages and ages to top out. But that's often what happens in the yen pairs in general. When they do reach tops, it zigzags and jags around for days, weeks, even months on end, and then you see these dramatic and sudden moves take place when there's an intervention or when there's a policy change or some sort of announcement or some other crisis happening to the US dollar. And we've seen the US dollar also potentially reaching a topping point. If you have a look at the DXY, we said this pink zone here was where the dollar was potentially going to find a top. Well, it has found a top. Whether it's going to continue to move lower or if we get up a little higher to 105.60, perhaps we do, I don't know. But so far, this looks pretty good. And we've seen various topping formation candles. Saw this beautiful hanging man, bearish engulfing candle, then an inverse hammer, which kind of sent it the other way, and just zagging around like that. And you often see this on the dollar index as well with topping patterns. You'll see it over and over again. It takes quite a number of days, sometimes even weeks, for these tops to play out. And along with that, if we do see the dollar start to fall away, we should see some strength come back into the euro and the pound. Well, we're long on euro and the pound, but small amounts, and I'm looking to add more into euro, pound, and potentially Australian dollar as well as time goes on. Well, I hope you found that useful. Sorry about the informal, noisy, and slightly irritating setting, but I've been forced out through cleaning. I've just come back from Johannesburg as well, so my office has been shifting around a little bit. So please like the video and subscribe to the channel if you enjoyed it, and also the links to my private group are below. Take care, have a great trading day. I'll speak to you soon.